SpaceX set to make its debut later this week, but some on Wall Street think its impact is already rippling through the market. Leslie Pickard joins us now with more. Yeah, we've made note of that. Leslie, good morning.
Yeah, good morning, Joe. The NASDAQ had its worst performance since April of last year, exactly 1 week before the SpaceX IPO, and that may be more than a coincidence. Recently, retail investors have been chasing the upside momentum in semiconductors and hardware and AI power names. Micron alone has seen $6.5 billion in net retail flows in the last month, driving 87% upside. At the same time, U.S. equity levered ETF assets have reached an all-time high of more than $175 billion, concentrated largely in the NASDAQ 100 and semiconductors. Selling flows in recent winners and levered products from retail to invest in SpaceX could be very large, according to BNP Paribas. The firm hypothesizes that retail plus passive flows into the IPO could be about $50 billion. If retail sells out of levered ETFs, that can create even more disproportionate pressure. Now, this volatility could become even more exacerbated after the IPO. You've got SpaceX options and levered ETFs that list the following week. And in the weeks after that, the company will start to be included in various indexes. So when you combine SpaceX's tiny 4% float plus passive and retail flows, and then these options and levered ETFs, you can see a situation where SpaceX's performance, either to the up or downside, becomes more pronounced and has the capacity to bring the rest of the market along with it, guys.
Every time we see the any type of sell-off, Leslie, it's like, well, you need you like Bitcoin, but if you want some SpaceX, you might sell some Bitcoin to get some SpaceX. And I think that's just one example of what we've been seeing, and it doesn't stop with just SpaceX. So I don't know what this means for the markets with all these hot IPOs coming.
Yeah, I think the question is, at least, the people I speak with, the institutional investors, there's ample cash available. There are a lot of different wells you can kind of tap there if they choose to invest in this IPO. Retail, though, is expected to comprise 30% of the SpaceX IPO, and they may not be sitting on as much ample cash in order to invest. And so that's why you're seeing kind of potentially the unwinding of some of these levered ETFs, which have a more pronounced impact on kind of the underlying assets there, in order to maybe free up some cash if they were to invest in this. So you're seeing kind of an inverse relationship with the sell-off, and then potentially the, at least retail trying to free up some cash to invest in this IPO.
Maybe they can get it from a private equity fund or something. Oh, no, that might be tough, too.
Yeah. Nope, that's locked up, Joe.
You can't do that either.
Good thought.
Yeah. Andrew.
Hey, Leslie, I'm curious what the reaction is on the street right now about both Goldman Sachs and Morgan Stanley's analysts. Of course, the bank itself is underwriting this big IPO, but their analysts have put out some, dare I say, sky-high projections. We can hope they get there. $3.4 trillion, I think, is the market cap that Morgan Stanley put on this company, 2040. This is something that banks, frankly, did not do, were not allowed to some degree to do post that global settlement that Elliot Spitzer made back, I want to say, 2001, 2002. So what's happened? What's changed?
Yeah, I believe there was some reforming of that settlement that took place in December of this year, kind of under the radar in terms of the communication between the analyst side and the investment banking side. It's not that there isn't still supposed to be a wall, but my understanding is that this is something where, the analysts can't publish research necessarily, but the investment bankers can maybe go to the analysts and say, hey, what do you think here? And then they'll kind of work up a model, and then that can be communicated. So it's not something that's used necessarily to win the business, but it's something that's maybe used as they have conversations just colloquially with investors. These are not numbers that have been published anywhere. They've just been kind of communicated. But I think, to your point, Andrew, that just thinking 14 years into the future for any company is very challenging for anyone to get their head around. What does my life look like in 14 years? I couldn't even tell you. And so, there's definitely been a lot of chatter about just the projections, the fact that, the valuation itself. I haven't really talked to an institutional investor who said, yeah, I'm really buying this on the fundamentals. It's all about, do you believe this very bullish future case or not? Or do you believe in the technical setup for the actual IPO trade or not?
Right. Leslie, the thing that struck me, though, was I agree with you. Supposedly, these were internal projections that these analysts were. They were not publishing this in a sort of classic research mode. And yet, in both cases, within, 24 hours of each other, those estimates were put out into the public. And so, maybe the rule of the road is that you can't publish, but if you can publish internally and then leak them, and you happen to be the underwriter, what does that say?
Yeah, I think it's a really, really good question. Because I think what happened was these were communicated to investors, but if you communicate it to thousands of investors, I don't know how many were communicated to, but if you communicate it to investors, plural, it could leak easily. Absolutely.